We start off with breaking news out of Washington. We are getting our first look inside President-elect Joe Biden's new economic plan. Let's get straight to Kayla Tausche live in Washington with the details. Kayla.
Melissa, the Biden administration is unveiling a $1.9 trillion economic proposal that will serve as the opening point for negotiations with Congress for a first stage rescue package as it tries to grapple with both the economic crisis and the pandemic during the first weeks in office. The program is divided into three specific pillars, so to speak. The first is dealing with the pandemic specifically and containing COVID-19. The second is direct aid to individuals and families. And the third is aid to state and local governments and businesses. And we'll run through exactly what's in each of these right now. Let's start with the pandemic pillar, which itself is about $400 billion. There's $160 billion for a national vaccine program. $20 billion of that will be partnerships with states. $50 billion will go to expanding national testing. $30 billion for additional supplies and PPE for frontline workers, and $170 billion for schools, both K through 12 and higher education, to open them and keep them open. And senior Biden administration officials say they're still confident that they can vaccinate 100 million Americans in 100 days. And those officials say that that key point about opening schools will be critical to getting women back into the workforce. As for the second pillar, $1 trillion in direct aid to individuals through several different programs. First, another $1,400 per person check. That's on top of the $600 checks authorized in December. An increase of weekly federal employment benefits to $400 a week that would go until the end of September. $30 billion in rental assistance and extending the eviction ban through September, increasing earned income and child care tax credits, and also raising the minimum wage to $15 an hour. That last point is interesting because it is something that has been in the president-elect's policy platform, but it is likely to get shelved if this specific package is going to be a bipartisan effort with bipartisan support. Finally, the Biden team is proposing $350 billion for state and local governments, $20 billion for public transit, and a $50 billion increase to small business disaster grant and loan programs. So certainly, Melissa, those are the high-level issues, and those are the price tags associated with them. There is a lot more that is going to be in this package. And when the president-elect speaks tonight, he's not only going to be addressing this first-stage rescue effort, he's also going to be talking about a broader, more comprehensive economic plan to come at some point later on this year. Today, officials told reporters about that September deadline that's set for a lot of the programs in this proposal. They were asked whether they believe that September, the end of Q3, is when the pandemic will finally be over and life will go back to normal. And they said not necessarily, but they believe that Americans and the economy will at least need a bridge until then. Melissa?
Kayla, thank you. Kayla Tausche. And I think what Kayla said in terms of this being the first part of an economic plan of the Biden administration is key. We saw the reaction immediately in the market today, Guy Adami. We saw the dollar weaken. We saw yields go higher. So what's the next step here?
I think that's going to continue, Melissa. I think the dollar is going to continue to weaken. If you look over the last 6 months, every rally in the dollar has been basically less and less severe, significant, whatever adjective you want to throw on the back of it. It says to me that although the consensus trade is lower, the consensus is going to be right. We've talked about this. Citi put a note out a couple months ago saying they saw 20% downside in the U.S. dollar this year. I agree with that. And I think that's going to lend itself to the resource trades that Tim and I and a bunch of people have talked about. Quickly, if you're looking for an individual stock, I know another one we've talked about since the spring when it was around 132 has been Caterpillar. They report at the end of the month. I think the stock made an all-time high yesterday or the day before, but I'm pretty sure we're right there now. I think earnings are going to be great. Valuation is reasonable. That was the poster child for global growth 5 years ago. It's becoming one again. So that's the name I think you want to continue to watch in the earnings at the end of the month.
What Kayla run through means potentially a lot of money into consumers' pockets, Karen. And I'm wondering how you think about that and if that's already reflected in the stocks.
I do think it's reflected. It's reflected in the market, right? We've seen the yields move on the expectation of the additional stimulus. We saw that pick up steam when Georgia went all blue. So I think that that's in there. But I look at something like a Foot Locker, a Nike, which were huge beneficiaries of that extra few $100s in consumers' pockets, they're pretty expensive now. So I think the easier money has been made, and that retail run-up has been huge. So I'm not sure exactly if there's I don't know at the moment. I don't see a real bargain where, oh, they're going to go here and it's not yet priced in. I don't have an idea for that.
Right. And we don't have a lot of the details, and some details will come forth tonight when President-elect Biden addresses the nation. Dan, when you listen to that address, what will you be listening for specifically?
Yeah, I think the most important thing, not the numbers. We know that 1.9 number is not going to be the final 1.9 trillion. It's going to be something different. I think the speed and the way that they execute the vaccination is going to be the most important thing for this economy reopening. I know that if you look at the Russell 2000 closing up 2% today, up 40-some% from the election on November 3rd, right? And you look at, Karen just mentioned retail. I know Tim has been all over this. Look at that XRT. It broke out at 53 and has not looked back, closed up 3% today. I think those are both incorporating a lot of good news about the pace of us reaching herd immunity at some point. I think Kayla just said it. Expectations are in late Q2, early Q3. It doesn't seem likely at this pace. I heard Jim Cramer this morning on Squawk on the Street talking about his experience getting that vaccination. It looks like it's going at a snail's pace here, so we got to speed that up. That's the most important thing to me right now.
Yeah, Tim, how about you? Because I noticed in today's session, at least, the solar stocks continued their run, and that was a group that really benefited from this notion of a Biden administration, for one, and two, a blue wave.
Anything EV and anything that I think is going to be supportive to the consumer is done well, but I think there's been a lot priced in. But and in fact, we've talked about maybe the irony is that the energy sector is the one that's got the greater legs, especially when you consider the allocation towards a lot of the infrastructure that's been designed here, and we've talked about the dollar weakness. I also think we're going to talk a little bit about Delta earnings with Phil LeBeau, so I'll save that story. But I think parts of the reopening trade are the more interesting ones. Yes, the XRT up another 3% today has outperformed the S&P by 30% since we knew the election outcome in November. Therefore, I think the expectation was this was coming. I think Karen has alluded to that as well. The trades to me that continue to make more sense are the ones where you have some semblance of value left. I don't think discretionary retail is all that attractive here, but I do think that a Walmart or some of the other big box stores, which I believe are re-rating on more of an e-commerce multiple, are ways to play that. Otherwise, I think you stay with weaker dollar trades, which continue to be emerging markets. Look at that breakout today by Taiwan Semi. Look at Alibaba coming back. And I think some of those global trades are really the bigger story here, despite a domestic focus right now.
Guy, I know you were listening to Jay Powell this afternoon, as you always
Intently.
do when he is speaking. But he made some very bullish comments in terms of his expectations of when the economy could actually bounce back, and his expectation that rates will remain low for a very long time, that they are nowhere near their goal. It may seem like two incongruous statements, but the bottom line here is that it sounds like he thinks the economy could bounce back. We've got this perhaps bigger than expected stimulus package on the way to consumers, and rates are going to stay low for a very long time. Isn't that just the cocktail for a market rally to continue?
Yeah, I expect the Rangers to win the Stanley Cup this year. I expect to win either Powerball or the other one, whatever they call it, over the next couple of days. Neither one of those things is probably going to happen. And respectfully to Chairman Powell, the portrait that he is attempting to paint is not going to happen either. Historically, not just him, but all these Fed officials are horrible in terms of forecasting. I don't think he's going to be any different. You know my view on the Fed. I'm sure Steve Leisman is watching, cringing right now. He knows my views as well. What I will say is, at a certain point, the continued weakness in the dollar is going to be felt by the U.S. consumer. That, my friends, is extraordinarily inflationary. And oh, by the way, rates rising on the back of it or in accord with it or in some sort of parallel world, that's not particularly bullish either. So just get ready. The Fed seems to think they can stick this landing like Kerry Strug. They might be carried off by Bella Caroli.
Shepard Smith here. Thanks for watching CNBC on YouTube.